Joining us now is Barbara Doran of BD8 Capital and Dirk Willer of Citi Research. Guys, welcome. Dirk, you say we're actually in a bubble right now, but it's still inflating. Sounds like perhaps you agree with Chair Powell that now's not the time to cut rates?
Yeah, very good point. I mean, the word bubble gets thrown around very easily, right? So we have a fairly strict definition. If it's something going up more than 2 standard deviations across long-term trend, in real terms, we call it a bubble. But you know what? When you enter bubble territory, you're meant to buy the bubble. You're not meant to sell the bubble because it keeps inflating. And we entered that territory middle of last year, and typically these things can last 1 to even 2 years. So yes, I think the bubble is still relatively early, and there is, of course, a big question mark whether the Fed really should cut into an inflating bubble, even though we do think they will.
Okay, Barbara, at the more micro level, I believe you like consumer discretionary on pullbacks, but given Foot Locker and Brown-Forman both had bad holiday quarters, Campbell's Soup said fiscal 24 sales are tracking near the low end of forecast, and FICO, I think, announced that credit scores dipped for the first time in a decade. How do you invest despite those rocks in the water?
Yeah, well, in the consumer discretionary, for me, there's very specific names, that are to me, rock solid. And we've talked about them before. It's the Costco's, it's Walmart, names like that really have such great business models that they can really withstand a lot of economic turmoil. And certainly both of them have great expansion plans. The Walmart side, they are really doing the omni-channel very well and have so many new initiatives. They are gaining share, and they are the biggest company in the world in terms of sales. And then Costco, they have lots of room to grow. They have a new CFO, and it's going to be interesting to see the initiatives they take, as they have a lot of room in terms of their e-commerce and other initiatives that they haven't yet moved into, not to mention new stores abroad and here. So that is where the areas that I am looking. Or, a MasterCard, if you want to consider that a consumer discretionary name. That or Visa. I mean, they're basically a duopoly in terms of dominating in that space. And we continue to see a move to electronic transactions away from paper.
Yeah. Dirk, with all the macro data we've been getting, with the commentary from Powell on day one of testimony on the Hill, Beige Book, I mean, is good news for the market now, or is everyone just getting ahead of themselves?
Well, absolutely, and that's a big change, right? Most of the second half of last year, bad news was good news for the S&P, and the reason was, of course, that people really wanted the Fed to get going and start cutting and so forth, or at least stop hiking at the time. And at this stage, though, we find the S&P reacts much better to good news. So good news is good news, and I think the reason is that investors basically understand the Fed will be going regardless. They will not be deterred by stronger growth data. Maybe they'll be deterred by very strong inflation data, but they will be not deterred by stronger growth data, and therefore good news is good news, and the market likes it.
Okay. I want to get your thoughts on this, Barbara, too, especially as we do now set our sights on the jobs report later this week, and we did get some early indicators that maybe things are a little softer than anticipated ahead of that.
Right. Well, I think we continue to see lots of good news in terms of employment and wage growth and savings. I mean, there's some estimates, for instance, in terms of a $38 trillion wealth effect, from the stock market action since 2019. But at the same time, you are seeing, even in the Beige Book, it was lots of positive things, but it was a lot of moderation, a little bit lower, in labor, a little bit lower here. You saw the JOLTS numbers today, a little bit lower in the number of openings, a little bit lower in terms of hours worked. So you're starting to see a softening on the edges, like credit cards. We are now at record high debt, but none of it is in the red, alarm territory. But it's the moderating growth that also I think is hopeful for the Fed. I mean, they really, that's what Powell reiterated today. He sees a soft landing still very much in his sights, and that inflation, certainly rates have peaked. So unless you had some nasty surprise, which doesn't seem at all likely at this point.
Barbara, we get Kroger, Costco, and Broadcom earnings tomorrow. You already talked a bit about the consumer and Costco, for example, but what are you doing with some of these AI-driven stocks? Not talking about NVIDIA, talking about Broadcom and some of the semis. Can you still buy semis and AI-driven hardware at these heights?
Yeah, no, because I own some Avago, not as much as I own NVIDIA. And it's always a question when any stock has had a big run up. But again, it comes down to this bigger question about AI. And certainly, I think you heard the news from the NVIDIA at two different conferences this week that the potential use and the broadening of the customer base is huge, and that goes the same for for Broadcom. So I think that it's always a little unnerving when a stock has had monster run up, but the earnings and the sales are real and sustainable for a while. So I think when you have any pullback like yesterday, we haven't even had a 3% pullback, as Mike Santoli likes to point out, for the last 4 months. So you will get these shallow pullbacks, and I think that's when, if you have new cash, you can move into these names. And if you're uncomfortable with the high PE, know that they usually grow into it, and you can also start a small position.